What's up, guys? Welcome back to the channel. My name is Bryan Sumardi and I'm your mortgage consultant. I'm here to share my experiences to help you with the home buying process. And today we're going to talk about conventional loans. The definition that you don't really need to know is that it's just a loan that's not insured by the government. VA loan, the USDA loan, and the FHA loan are all backed or insured by the government, but conventional loans are not. So with conventional lending, it's actually backed by private lenders, such as banks and credit unions. And you've probably heard of this term, but Fannie Mae and Freddie Mac are the big investors for these conventional loans. And let's just get right into it about the benefits. So with a conventional loan, you have a lot more flexibility versus a government-backed loan. So for instance, with a conventional loan, you can buy your primary residence, you can buy your second home, second residence, or an investment property with the conventional loan. Usually with the government-backed loans like FHA, USDA, and VA loans, it has to be your primary residence. And another benefit of the conventional loan, you can choose between a fixed rate or a adjustable rate mortgage, or an ARM. Normally, I always suggest going with the fixed rate because it's a lot more stable and you never know what can happen in the future, but the option is there. And another point to the conventional loan is that when you have PMI, private mortgage insurance, it automatically drops off a 78% loan to value. So as soon as you get 20% equity in a property, you can call your mortgage servicer to get an appraisal to get the PMI removed. On the other hand, something like FHA, that PMI, unless you put down at least 10%, will stay on for the life of the loan. In most cases, when I've been doing the math here in the DMV, it'll take you about 3, maybe 4 years to drop your PMI just because of the high appreciation rate around here, just according to history. And say you're paying maybe like $100 a month for PMI, or maybe like $120. You're probably spending maybe $5,000, maybe $6,000 over the span of those 3 to 4 years versus you having to save that full 20%. And I think current housing prices in our area is like 500,000. So imagine that. 500,000, 20%, that's $100,000. How long do you think it'll take you to save that much money versus you just buying a property, paying an extra $5,000 and already owning a property for 3-4 years? But to me, that's a simple thing, but you make your own decisions. All right, enough with the benefits, and let's go to the cons or the downsides of the conventional loan.
Oh my God!
Conventional loans typically require a higher credit score. I would say at least a 620 just to get in there or just to qualify for a conventional loan. I don't think that's a bad thing just because of the flexibility. When you do have good credit, you have more options, you have more doors available to you, so it just makes sense to me. But generally speaking, if you have a score between 620 to 680, your debt to income ratio, in order for you to qualify, it's a little bit lower. Sometimes it's at like 43, sometimes it's at 45% instead of the normal 50% DTI ratio. Another downside worth noting is that usually conventional loans have a higher interest rate compared to the government-backed loans. And to piggyback about what I was saying earlier, when you have that 620 to 680 credit score or 679 credit score, it's going to be a lot worse or a lot higher in interest rate because of the lower credit score. So this could make it more expensive for you over the life of the loan. But now that you have equity in a home or ownership of a home, you should be able to utilize a cash out refinance over time to eliminate your credit card debts and increase your credit scores and creating a good experience for you in the future, or a good progression, I would say.
Hey, that's pretty good.
But this is why you should always have a good loan officer to kind of walk you through the options or walk you through the scenarios of where you should be progressing in your life when it comes to your personal finance and home ownership. All right, now let's go full circle. So bringing and summarizing everything back to the beginning, let's talk about a conventional loan is just not backed by the government. It also gives you more flexibility than a government loan, but they require a higher credit score and sometimes they have to offer you a higher interest rate because of these flexibility terms. So if you're considering using a conventional loan for your next purchase, Be sure to shop around lenders and figure out what's the best option for you and who you relate to the most and who will provide you the best service. And there you have it. If you have any questions or comments, please leave them below. And don't forget to smash that like button and hit subscribe for more helpful content like this. Thank you for watching.